Hello traders, welcome to another trading interview, this time with one of our serious FTMO traders, Raul from United States in Doral. Welcome, Raul.
Thank you for having me, Peter. Appreciate it.
Thank you too. Guys, to those who are listening us for the first time, FTMO is a proprietary trading company that search for trading talents, because we have developed a unique two-step evaluation process that consists of FTMO challenge and verification. And once you pass this two-step evaluation process, you will be offered a unique placement in our proprietary trading company where you can remotely manage your own FTMO account with up to $200,000. And that is why we have Raul here, because Raul right now has one mastery account with $300,000 because he passed 3 times the FTMO evaluation process. And this month, he had a profit of $100,000. And that's a serious result. So before we start to breaking down his strategy, please, Raul, can you introduce yourself to us briefly and tell me something about you?
Yeah, so my name is Raul, obviously. Most of you probably know me online as Lambo Raul. So I've been trading roughly since I was 17 years old. So I've been trading for the last few years now. This is what I've dedicated myself to since day one, since I even downloaded my first MetaTrader program. That's just all I've been dedicated to for the last few years.
How long?
Yeah. So I want to say roughly like maybe 4 or 5 years I've been trading.
Okay. And what did you do before your trading career?
Before my trading career, I've always tried doing something in the sense of entrepreneurship. So I used to actually build and sell computers, sell products online. But when it comes down to trading, you know, I didn't really have any guidance, nor did I have anybody I knew that actually traded. So it was really all just kind of like only my own business and trying to sell products online or do something that's not the typical 9 to 5.
Cool. And what are you doing when you are not focusing on your trading career, like your hobbies, etc.?
Well, when I'm not trading, so my main hobbies is obviously doing outside activities, right? But I'm really big into cars, and I like to have I have a little collection of cars. So I'm really big into that. I would say that's like my number one hobby.
Nice. So what was the reason for it to start trading?
So when I was roughly 15, 16, my initial dream was to join the Marine Corps. I wanted to be in the military here in the United States.
Nice.
Right. But sadly, when I was roughly 15, 16, I went through an era or a period in my life where I was in and out of the hospital very frequently, and I ended up having surgery, and then I ended up being diagnosed with Crohn's disease. And doing more research, I actually couldn't enroll and enlist in the military with Crohn's disease because it's a chronic disease and it requires a lot of constant attention. So, I was home one day, pretty sad to be honest. And I was just looking at multiple ways on how to make money online because I really didn't know where my life was going to be headed towards at that point in time. Because I was set on, I'm going to the military after high school, right? So I stumbled across trading, and then, it just opened a whole new world for me.
Wow. I'm sorry to hear that, of course. And I hope you are doing well right now with everything.
I appreciate it.
Okay, so you are right now, everything's all right with you, right?
Yeah, I'm doing much better. It was really bad in my teenage years.
Okay. So how did you learn to trade after you decide that you want to trade?
Yeah, so I took a few online courses, and then from there, really, it was all trial and error and experience is really what it came down to. Because obviously, there's some online courses that, don't teach you risk management or proper risk management. And, a lot of the courses that I took were mainly like technical focused. So after I completed those courses, I started really understanding that trading is really just a game of psychology. I was doing a lot of research on trading psychology and, trading money management. And from there, it was really just all trial and error.
Okay. So thank you very much for telling me this personal stuff. I really appreciate it. So
yeah, no problem.
Let's go for something that everybody wants to hear. We want to know, how did you make the profit of $100,000? I would like to break that down with some overall perspective, and I would like to hear your, setups in the trading view or MetaTrader 4 or 5, and I also would like to know your fundamentals, sentimentals, or statistics in your trading. So first thing first, what did you trade this month, man?
So really, I've only been trying to just focus on gold. I've been trying to focus on gold and really learning how to just focus on one pair. Because the example I always tell is that each currency I treat as an individual, and just like an individual, it's going to have its own personality. So if you can really, spend more time with a certain individual, you're going to understand a lot more about their personality versus, trying to understand and trade all these different instruments. To me, it's just really about that one or two currency pairs is really what I like to focus on. So for me, it's really just gold and GJ or GBP JPY that I like to focus and put my time and energy into.
Okay. So this month it was only about the gold, right? And when you are looking at the gold, you probably want to look at some, chart sentiments where you are looking for bearish or bullish markets. So you are looking for some higher highs and higher lows, or lower lows, lower highs. So I'd like to know what other things you use during this when you are, for example, looking for those sentiments.
So when it comes down to like my daily routine and looking at the market, right, always check the fundamentals or short-term fundamentals, such as, high impact news. If there's high impact news that day, typically I'll try and avoid trading that time, maybe trade sometime after. But let's say I already have a position in and there's high impact news, depending on if the position's in profit or not, I might move my stops to break even. But then the problem comes with slippage, right? So, we could see slippage. So I may just close the position entirely. It really, every day is very situational. But other than that, I come onto the market and obviously I like to read price. That's my main thing. It's just reading price, understanding where price is at. If we're trending, if we're in a consolidating condition, looking at the highs and lows of price, the higher highs, the higher lows, etc., etc.
Okay. And if you are still talking about the gold right now, when the New York session starts and ends, that's when the most liquidity in this is in the gold. So what is the best time for trading the gold for you?
To be honest, I actually trade the gold during the London session.
Okay.
That's really that's really when I've found typically, so the way I look at trading is I see trading as a game of probabilities, right? And depending on each setup, it's going to have a different probability. Right. So it's either going to be a setup where the probability may go, or how can I word this correctly? Right. So the way I see trading is it's either going to go up or down. Right. So
nothing more.
How can I?
It has to go only one direction.
It has to go in one direction. Right. So it's how can I find the setup with the highest probability that it's going to go in my favor? After I've determined that and I determine where I want to enter and I wait for my signal to actually get in, I simply look at the risk to reward of what areas price has the highest probability of reaching. Again, it's all that probability mindset. It's not that, okay, I will, or price will do this, or, I see that price is going to do this. Like you see how a lot of people mark up their charts and they're trying to predict too much. I really just try and focus on the probability side of trading, right? So after I've determined the risk reward on that specific trade, or the potential risk reward, because one thing that's always predetermined is the risk. Something that's something that we don't know could be the reward, right? It's all about managing the risk right after that.
So always starting the trade with set up the stop losses and take profit, right? Before you even enter a trade, you should already know where you're going to get out if you're wrong and where you're going to get out if you're right. Because once you press that buy or sell button and you have a position open and you have live money at risk, you're no longer thinking as logically as before you enter that position. But sometimes you have to move the stop loss to break even, right?
Yeah, sometimes that's active trade management. You know what I mean? If I'm up 2 times my risk, I'm not gonna have my risk still open.
How often do you use that, for example? Do you have set up some trading stop or some advanced, stop losses?
Yeah, so with the strategy that actually helped me make the 100K in the month, it's more, I like to call it the dynamic risk strategy. So it really uses market structure to the fullest potential, and it works on gold so well because once gold is outside of its period of consolidation and we're trending, right, you're talking about gold can move a few hundred pips in just the London session, right? So trailing my stops is something that I do actively try and perform during a specific trade. It also works well for me when it comes down to risk to reward as well. If I'm up a 1-to-1 risk to reward ratio, I'll move my stops to break even because I've already made my risk. There's no point of having open risk on the table. But again, it's very situational. Sometimes if I move my stops to break even too early, then it'll be counterproductive.
Of course.
Yeah.
And for example, have you encountered some fundamentals that went against you during this period of time, during this month? When you put the stop loss and then something happened, some news release happened, or have that occurred something in this period?
To be honest, since Trump hasn't been in office, no. But the thing about this strategy that I use, it's either going to be a trading day. It comes down to really experience, right? Because I can teach a strategy to anybody, but if you're not an experienced trader and you really can't handle and deal with your emotions, then it's going to be something that's very challenging. You could easily turn a winning day into a break-even day, right? So I have encountered those days, and this strategy is a strategy that I've developed fairly recently. I've been backtesting it and working on it for the last few months, trying to make tweaks. And after obviously looking at the results, I'm going to continue to work and tweak on it to try and improve a few little things here and there. I like it, but I'm always looking to improve no matter what. You know what I mean? Trading is a game where you always got to look to improve. So.
But you cannot win always, right? It's all
no, of course,
win rate and risk reward ratio.
Yeah. Personally, I don't really look at the. I do look at the win rate. I do pay attention to my win rate, but to me, what's more important is the risk to reward ratio. Because what I've seen in a lot of swing trading or day trading strategies is that typically the win rate is going to be a lot lower. So maybe a 50 to 60% compared to a scalper who's up there in the 70s to 80% win rates. But the risk to reward, can compensate for that significantly, right? And me personally, I'm not a person who minds losing as much as I win. As long as, hey, one trade can make back 2 or 3 losses, I'm perfectly fine with that. And that's just me, my personality. Everyone's going to have a different personality. You might have somebody else where, they need that constant win. Or might have other traders who don't care if they lose more than they win, as long as that risk to reward ratio can cover their poor win rate.
And do you have some rules when, for example, you only want to trade 3-4 trades a day and then you will stop it?
Yeah. So when it comes down to,
I'm asking because the overtrading, it's something.
Overtrading is a big thing. So typically, with this strategy, I can't measure the amount of trades taken by position. Right. If I'm trading my normal strategy, then it's typically just one position per move. But what I consider a trade in this specific strategy is the move, right? I'm not too sure if that makes sense, right? So typically session will just push price in my favor. I try and do a combination of both because I know there's going to be no volume really until London session, right? At least. So I try and wait for London session as best as possible, but sometimes price will already be in my favor before London session, right? And I can actually go over an example where that happened to me this week. Nice. I believe Sunday London session, right? Where it was around 10 o'clock at night. London session for me is 3 in the morning, right? And I see my position. I know where I want to get in at. This is the level where I wanted to get in on this trade. And if I would have waited for London session, then I would have completely missed out on the opportunity and missed out on potentially making back losses or adding again, to my gains.
So you're obviously a technical trader. So could you show me some technical analysis in your MetaTrader or Trading View?
Yeah, sure. So let me pull up my chart here. So basically what I'll do is I'll try and make like a brief description of how the strategy works. But really, this strategy only comes into play a very few amount of times, right? So back earlier in the year was a lot better trading condition for gold. As you can see, price was really trending. We really were making lower lows and lower highs. It was very clean market structure. This is when gold is very not easy to trade, but this is when you can definitely make a better return on your investment than typically. You can make more money trading when gold is actually in these nice trending conditions. As you can see, that has significantly changed over the last few weeks here, right? So since, let's just call it March 8th, gold has really been in a range. So it's been very difficult to trade. So especially when gold was in this area here, very choppy, really is it's unattractive.
Yeah.
What's
happening there, right?
Yeah. So it's kind of like, it's very difficult to look for these bigger moves. You know, typically this is when a trader is going to lose money. This is typically when a trader might find more losing days and break-even days. But then, you know, when gold breaks out, like I said, you know, we do have a big breakout. This was a 500 pip move to the downside, right? And I've been calling this for quite some time, right? So the way I like to kind of analyze the market is typically I'll start off in a daily and weekly time frame, then work my way down, right? So overall, you know, I like to use the moving averages simply just to split price, just to look for more or less like a dynamic support and resistance level. Because if you look at the moving average themselves, you typically see that they get rejected, and these could be potential areas for pullback. So when price is actually trending, I like to see price actually pull back to my moving averages. I don't necessarily like to use a fib tool all too much, but I like to use the moving averages a little bit better because I'm just trying to eliminate as many tools and indicators from my screen as possible so I can get better and better and better at just reading price action. Now I use the 50 SMA and the 20 SMA for the last 50 trading days and the last 20 trading days to really determine a short-term and a longer-term trend.
And you are probably interested more in the crossing of the moving averages, right?
Yeah, so typically when they cross is when I'm going to be looking to change, change sides here, right? But then, you know, moving averages at the end of the day are just lagging indicators. So at the end of the day, I always want to rely on price.
They are too slow.
Yeah, exactly. So when it comes down to me reading market structure, it's fairly simple to read that price is making lower lows and lower highs. So when gold was at this point in time here, right, we had to pull back to a major level where, as you could see, there was a lot of selling pressure, or this was a level of resistance, supply and demand, whatever you want to call it, right? So price had initially rejected the lows at 1683 and pulled back to my highs up here, or resistance at 1738. So I was really expecting for sellers to come into the market and push gold, push the price of gold down. And again, it's all about probability, right? If price rejects these highs or this resistance at 1739, what's the probability of price coming back down to our support at 1683? I would say it's a lot higher than price continuing to break these highs and make new highs, especially that we're in a bearish condition, right? So these are just things that I like to look at, and I really like to pay attention to the candlesticks, right? But now let's look at a more shorter term time frame. So here we're on the 4 hour. What I like to do is mark off a level of significance that has to do with current price, right? Because all of this is really relative price action to me, right? All these levels here, especially that we're in this consolidation range. Now, when it came to gold, initially I did take this position, and I could kind of break down how I took this position here. This was actually the trade that took me to that over 100K mark right here, catching the move from literally right here to right here, right? But what I wanted to go over before I, could potentially go over that is really my kind of mindset coming into the market when I took this position, right? So again, at this point in time, the moving averages are red over blue. We're starting to see, buyers come in at this zone that I have here, right? So we could clearly see, there was a lot of rejection to the downside. We had a big impulse to the move, or we had a big impulse up. But if it was to come down a price for here, I could look for a buy opportunity, possibly up to this level here, right? Because I see price having the highest probability of coming back up to these highs over here. Why? If we break it down to a lower time frame, we can see price has struggled multiple times to surpass this area over here, as you can see, right? Notice all the indecision here before the breakout to the upside. Even when price came back down, notice the indecision here as well. Previous price, this area was a previous level of resistance, now holding as support. And then look at the indecision when it comes down to price there. Sellers just kind of broke through that level. So we're having a lot of indecision at this area. So again, if price rejects this level of support, what's the probability of it coming back to this level versus coming all the way back up to these highs? I would say the probability is a lot higher. Now, does the risk to reward make sense? In this specific trade, it did not. So because of the way I like to take my entries, sometimes if I'm taking an aggressive entry, which, you know, I will, because to me, it's not necessarily about the what, right? In terms of like the price action signal, it's more about the where. So to me, getting in near that zone and decreasing my risk while increasing my reward at the same time is what's more important to me. And that's why I may take more losses than the average person, because I trade very aggressively. But at the same time, that's all compensated by my risk to reward. One trade will make back 3 or 4 losses, which I am more than happy with. And, you know, that's how I've been trading for the last few years. Now, when it came down to me actually taking this position, it was roughly maybe like 10 o'clock at night, right? And I was waiting for, once price had broken under here, I said, okay, price had broken under support. I'm going to wait for price to actually give me that pullback, because price was trading at this point in time here, right? I'm going to wait to see if price can give me that pullback back into this level of support and see if this support will hold as resistance, to see now that sellers have broken through this area, to see if there'll be selling pressure to give me that sole opportunity to take this position short, because I want to get a best discount as possible, right? The better the discount I get, the shorter I'm decreasing my risk, right? In terms of pips on the stop loss, and the more I'm increasing my reward in terms of pips on the take profit, right? So it was as simple as price came down to here. We have this previous level of structure. So what I'm going to do is I'm going to mark this off right here. So you could clearly see that, right? We have this previous level of structure. These were our previous structure lows within this bearish condition, right? Price pulled back to the 50 SMA, which typically is an area where I'd like to look into go short at or long at, depending on the trend. And then you go down to a 15-minute time frame, and we have, this is what I call a bearish variation pattern. So what I pretty much did was I entered the position right here and took the trade down. And the way the strategy works is, so let's say I take a position here. Initially, my stop loss is obviously going to be above this high, right? So if I take a position here and my stop losses are above this high, what I like to do is overall, when it comes down to my target, right? I actually forgot to mention my targets. I look for previous levels of support and resistance, right? So I'm actually going to go to a 30-minute time frame. And what I had marked off was this area around here, pretty much like a median where I see price hit the most. And to me, that was all determined by this area here, right? So this is where I was looking to take price lower, right? Because I saw a potential price breaking these lows and continuing to trade lower. So with that in mind, my overall target roughly being 1726, if I can remember properly, right? So I have my initial short position here. I'm short with the overall short-term trend here on the 30-minute time frame, right? We have a clean break and retest of this level of structure. And again, when it comes down to the break and retest, that is like my bread and butter setup, right? This is a setup I can identify without anything being on the chart. This is a setup I've been trading for years. I know how to trade this setup very well, right? So now that price had pushed into my favor, obviously this position is in profit. So the way the system works is what I look at is other support and resistance levels. And I like to look to enter. So for example, on this trade, I took it based off the 30-minute, right? So I'm going to go down to the 5-minute and look for 5-minute market structure and look to see if I can basically scale in. So if I were to take this position at a 2% risk here, right? Let's just leave it at a 2% risk. Now that the position is in profit, I'm going to move my stop loss to break even. So I have no risk at all at this point in time, right? Because prices moved in my favor roughly, let's call it 50 some pips. And I remember on this position, I had about a 25, 30-ish pip stop loss. So that's about 2 times my risk. So I'm not going to have any risk open left on the table. Now, when it came to price, this was a level that I had marked off here based off the 4-hour time frame as well. This was this area that I had marked off here. So I'm actually going to go back to where it was. I'll go to the 5-minute time frame. So let's go back to this trade. Right. So now that price had broken under, came back above, right? This was my first sign that price could potentially go down here. but that's not a very strong price action signal for me. That's a price action signal that, you know, we could still see a little bit of consolidation. Price could still potentially pull back a little bit more. And again, I want the best discount as possible, right? So now that price had given me this price action signal, what that allowed me to do was actually enter another position here. I'm going to make this green, right? Enter another position here at a 2% risk. 2% risk here. And this stop loss is going to be above these highs, because if price breaks these highs after continuing to go down and make new lows, I'm most likely wrong anyways, and I want to get out of my position because, again, I'm looking at a short-term move here, right? Now, my stop loss is here. What I'm going to do is I'm going to move this stop loss down here, typically to try and cover this position. If this first position can't cover this position's loss in profit, then I won't take it, or I won't go with a 2% risk. I'll maybe go with a 1.5, maybe a half sometimes, but, you know, just so you could kind of see how it works, right? So now that both positions are pretty much in profit here, what I did was I moved both of my stop losses. Once price was trading all the way down here, we had hit my 17.25 target already, right? So I wanted to see if I could potentially squeeze out a little bit more, because to me, this structure still looks very bearish, very clean. You know, I could potentially look to increase my risk reward on both those positions. So what I did was, again, I trailed my stops. Now my stop losses are here, right? And I did notice that price had this area of over here, which was our previous market structure lows based off the hourly time frame, based off the 30-minute time frame as well. So as you can see, these were the lows down here. You go to a 30-minute time frame, you can see that a little bit cleaner, right? That's why I like to use multiple time frames. Again, I'll never really just stick to one time frame. But you can see that price clearly had broken under, right? And then so back to the 5-minute time frame, right? Price again pulled back, and this is again the bread and butter of, you know, my trading. We have a break and a retest. And the thing about the break and retest that makes so much sense to me is all determined through buying and selling pressure and areas of interest, and multiple people looking at taking this position as well. We all know trading moves off of, obviously, the speed of which orders come in, which will cause a breakout, right? So now I ended up taking another position here once price broke under these lows here as a way to potentially scale in, right? I forgot I could have just been using a long and short position this entire time. So I took a position maybe halfway down this candlestick once we broke under both the lows of these candlesticks here, right? And then stops go above the zone here. And then I moved all of these stop losses. Well, maybe it wasn't that tight, but I moved all of these stop losses in profit. So we're talking about this position is already up almost three times, maybe 2.5, 2.7 times my risk. This position is up about a 1-to-1, right? So this loss is definitely going to be covered. But since it's so close and the stop loss is so tight with this specific position, I was not going to put a 2% risk here. I put a 1% risk, right? Now, price obviously went in my favor, but once price actually started to break above this area here, that's when I actually ended up closing the position. So not with the best risk to reward ratio, but like I said, you know, with this strategy, you have to be very on top of it, right? You have to be very actively managing your trade, right? So that's how I was able to pretty much, you know, catch this move. If you look at the time, this was not London session. This was way before London session, right? I believe, if I remember correctly, this was around like 10:30, right? So I could have completely missed out on this move. But if I would have waited for, you know, London session, I wouldn't have really been able to take a position here, right? Because again, you know, in hindsight, you could see that price went bullish, but I would have honestly still probably looked to go bearish since we're breaking levels of support. You know, the 30-minute looks like it's in a bearish condition, right? I would have never expected a big bullish move like this one. But anyways, that's kind of just like how the system works, and that's really how I was able to make those $100,000.
So it is a pretty thorough analysis before you execute your trade.
Yeah, for sure. Always.
I will just sum that up to our followers and subscribers. You are looking at pretty much a lot of time frames, like daily, weekly, 4 hours. You are changing it like normally a lot. Then you are trying to draw some support and resistance levels that also can change. That support can also be resistance level sometimes. And then you have some signals there. You are using the crossing of those moving averages. I believe you did not set which moving averages you are using, what time periods.
The 20 and the 50.
20 and 50. Cool.
Yeah.
So the crossing is telling you if it is bearish or bullish, or if it is going to bearish or bullish. And then you are also looking as a price action analysis. So
yeah.
you are trying to look for some patterns there, and what does each candle says. And then you are, of course, looking to some, bearish or bullish market when you are seeing some lower lows, lower highs, or higher highs and higher highs, right?
Yep.
Wow. Okay. So, and this works for you in the long term. How do you modify your strategy in the process? Like, what have to happen right now that you need to change it somehow?
Really, for me to change it, I don't think I'd ever change the foundation of, my methodology, because my methodology is very discretionary. Right? It's not like a very systematic methodology. It's really just focusing on price and reading price action and looking for certain levels to take trades off of, based off, the probabilities of what price could do at these levels, right? So if I'm going to change anything, it's really going to come down to maybe execution, stop loss placement, or looking for, risk to reward ratios, maybe trying to improve on increasing them, something along those lines, but I'll never change the foundation.
Yeah, that's why I'm asking you, because you want to improve. So that's why I'm asking you, what did you improve right now? For example, in 3 months period, what was your improvement in your strategy?
So really, I tried making the strategy really based off of these conditions for gold, because even though I didn't make a lot of money trading gold at this point in time, I felt like I'd be maybe closing the positions a little bit too early and not letting the positions run, because potentially, this could have been a 700-800 pip move that I could have swung, right? And how could I have looked to, basically maximize the most out of each and every move? And that's really when I came up with this dynamic type of risk, or this scaling in type of strategy, especially like when it comes down to like the intraday moves, because this is the 4-hour time frame, right? You're talking about, this entire trade from the high to the low took about 2 days and 20 hours, not depending if the weekend wasn't there. Personally, I could hold for 2 days, no problem, right? But I try and maximize every intraday move as much as possible, and that's how I was able to really do it.
Okay, cool. Thank you a lot for this technical analysis. And all your trades being journaled in our metric apps. So we can see there are some import statistics, and also some charts. So can we take a look there?
Yeah, sure. So you can see my metrics, right?
Yeah, I see it. Thank you for that.
Yeah, so basically this is the account. As you can see, there is the $107,000 profit. Now, obviously, it's not always about the profit. We can look at the max loss. So I like to actually use the profit as leverage for this strategy, because obviously the FTMO rules are very, very strict, right? You have a 5% max daily loss, which obviously, as you can see, the closest I got to the daily loss, I was only a couple $100 off of, and that's the limit that I had set with this strategy, right?
And do you have your own strict rules when you are not trading with FTMO?
Yeah, when I'm not trading with FTMO, they're roughly the same, right? Because obviously, it's my maximum daily loss. I actually have it at a 6% on the day, just because sometimes I like to take 3 trades at a 2% risk.
So they are hard to maintain, but they are really useful, right?
Yeah, of course. I'm telling you, like, when it comes down to the daily loss, it will save you from over trading so much, because you really got to think about it. Is it worth hitting that maximum daily loss, not necessarily blowing the account, but then having to go through the challenge again and then waiting to actually trade live? It just isn't worth it. And when it comes down to the max daily loss and the max loss, it's really there for discipline. Now, when it comes down to the max loss, I know that could probably put a lot of pressure on people. I did fairly good when it came down to the max loss. As you could see, I was down maybe roughly not even 3%, maybe that was at 2.5%, right? So I maintained pretty well above it. I had pretty much a few trades that almost got me to a 10% gain. And then I pretty much ended up, that's when I started risking 2% per trade. So not until I get to about a 10% gain will I start risking 2% per position. So all throughout here, I was kind of just risking 1%. And then I found that one big move that helped me get to this gain using that same exact strategy, right? Kind of just scaling in, 1% here, stops at break even, then 1% there. Then obviously that accumulates, you know what I mean?
Yep.
So
increase the risk for example, 2%, right?
Yeah. So once I got to roughly that 10% gain, I started increasing the risk to 2%, which on this account is $6,000 per stop loss hit, right? So that's why it was also very difficult to try and maintain under that daily loss as well, because 2 trades and I'm out for the day practically, you know what I mean? So as you can see, it was a pretty steep growth here, I want to say. Typically, I don't have this steep of a growth. Normally, it's a little bit more, how do you want to call it? More
hits, right? It's like increasing consistently up.
Yeah, that's the one thing I like about this strategy, is because sure, you might have big spikes to the upside, where you shouldn't really have those big dips if you're really trading it properly. And when I first took this strategy live, that's the issue that I was encountering, right? So this is when I started making little tweaks here and there, and that's really when I started to see a better growth, versus obviously it's going to be normal to have drawdown on the account. No trader is going to win 100% of the time. Again, me personally, I'm not somebody who's into win rate that much. I personally look at win rate in terms of days, right? With this strategy, because with this strategy, I'm taking so many positions that maybe one losing day, I had 6 positions, and that's the day that I lost, versus a winning day, I only have 3 positions, but those 3 positions cover, all the losses of the losing day plus more. So the win rate in the metrics may not be accurate. So what I like to do is kind of look at the win rate in terms of days, which, as you can see, is all through here, out here. So I had about 9 winning days, which this day was actually supposed to be a winning day, but I was so close to the 100K, and I was in this emotional spot, because that 6-figure number, making 6 figures in 2 weeks, is something that's it can be emotional, right? So I was in a very emotional place where I was in profit. I remember this so vividly. This was the biggest mistake I've made of the year. I'm a human.
It's hard to maintain this discipline right now, because you want the numbers. You want
I want the number. You know what I mean?
It is hard to maintain.
It's an accomplishment. It's an accomplishment. So you know what I mean. I'm not a robot. I'm human, and as human, we're gonna make mistakes. And this is that one big mistake that I made throughout the trading year. I turned a profitable day into a losing day, and I was so upset at myself that I cannot believe I had made that mistake. I hadn't made a mistake like that in months, where I turned a profitable day into a losing day just because I want to get to a certain figure. Now, obviously, trading is a game of psychology, and you have to overcome certain things. But this was that day where I had turned a profitable day into a losing day, which really I should have had 10 profitable days and 3 losing days, right? But now the statistic is obviously 9 profitable days and 4 losing days, right? If I remember counting correctly. Now, obviously, the average risk reward here is 2.15, which, as long as I can maintain a win rate above 50, then statistically you're going to be profitable. Yeah,
even though it's low win rate, right?
Yeah, right. But like I said again, the amount of positions, like you can just see the amount of positions I'm taking, right, is a lot, right? So I like to track it in terms of days. But yeah, so obviously, the average profit was around $5,000. The average loss was around $2,300. Now, when it comes down to the trades themselves, no trade was exactly the same. Maybe some of the days I was trading a 15-minute time frame and my stop losses were very, very small, compared to me maybe trading a 30-minute time frame and my stop losses were, a lot bigger, right? So that would allow me to actually obviously increase the lot sizes on some of these trades, because no matter what, if I have a 10 pip stop loss versus having a 60 pip stop loss, I'm always risking that 2%, right? I try not to go over that 2%. The 2% is like the cap, especially like once I'm in, this much profit, because this is already a 20% gain here, right? I'm just going to be continuing to risk 2%. It's not like I try and go past that. Maybe some days I may miscalculate the math because obviously everything is happening so fast in like a 5 and 15 minute time frame. So for me to properly, use my brain, because I do have the position size calculator.
Okay.
Right. But
that is something I want to ask you, because when I had a look at your strategy, I have seen that some days you open like 120 lots, 180 lots,
yeah.
And then someday you open only 60 lots. And your first trade in this period, you only open 6 lots. So can you tell me why it is so different?
Yeah, so like I said, I really tried to get to that 10% gain first. So the day that I had this 6 lot, it was a $3,000 risk for a $6,000 gain, which would be a 1 to 2 risk reward ratio for a 1% risk for a 2% gain, right? So then, I was like talking to myself, and this is when I already had the profit. So it's like, okay, let's start implementing the strategy now, right? So this is typically how, Typically, this is how I would normally trade. Just one position, one trade, whatever the lot size tells me I got to do for that 1% risk. This is typically how I would trade. But then this is me increasing the strategies. You can see from one day to the other, this is when I started to implement the strategy. As you can see, I had brought the account into a drawdown of 1%, and then it started kind of floating around there. And this was that day where the strategy really started to kind of come into to play here. So yeah, that's that.
Okay, show me your best trade and show me why or how did you make I cannot see it, $36,000. Can you show me that?
Yeah. So as you can see here, this was the combination of the best and the worst trade, really all in the same area. So when it came down to my trading view, this was that gray zone that we were talking about. So initially, I was expecting price to go bullish. So I'll go over the best trade first, right? So initially, I was expecting price to go bullish, as you can see here on this 4-hour time frame, right? We had a loss of momentum to the downside with this 50 SMA, and I'm expecting a breakout to the upside. Now, when it came down to this position, right? Let me see if I can find myself here, because on trading view, it's a little bit different, right? So we had the overall median of this support, resistance, supply, demand, whatever you want to call it, being this area here, right? And we have resistance being here, right? So after price rejecting support 1, 2, 3 times initially, where we had a pretty nice, at this point in time, where we had pretty nice reaction out of it. And again, this doji signal is again a signal of loss of momentum to the downside. To me, every candlestick is like a story, right? And if you could read that story and interpret that story, right, you can do your best to really understand what price is trying to tell you. So at one point in time, sellers were in control of the session, but by the time the session ended, buyers had pushed price all the way back up and above my level of support, right? So when it came down to me actually taking this position, I believe it's around here, right? Price had given me this simple double bottom pattern. I took my entry here. My stops were down here. Now, when it came to the risk on this position, I believe it was obviously with compound interest, a 2% risk is no longer going to be $6,000, right? A 2% risk for me at this point in time was roughly around $8,000, maybe $7,800, something along those lines, right? So that was what I was willing to risk. But I saw that, again, the probabilities are in my favor. And you as a trader, you have to come into the market and test your probabilities every single day once they do present themselves, right? So I took the trade from here. And as you can see, this trade couldn't have gone any flawlessly as it did. It just went straight in my favor, hitting my targets being this median of resistance here. Sure, I could have squeezed out maybe a little more profit, but to me, I had hit the 100K mark. I was up more than 2 times my risk, and I'm going to close the position. So I ended up just closing the position, playing it safe, because again, I don't know if price is going to come back down, go against me, and I'm already at over the 100K mark.
If
right? I'm already
the greediness is sometimes very hard to maintain, but obviously you did it.
Yeah. Right. So, logically, it just made sense for me to close the position. Now, sure, this was a very big lot size, and if I would have held, I would have probably made six figures just on this trade alone. But again, I'm not going to know what price is going to do. You know what I mean? I don't adopt the ideology that I know what price is going to do. I know where price is going, because at the end of the day, we don't. We can only determine the probability of what price is going to do. So that was pretty much the best trade. Now, when it came down,
and what about the worst trade, right? It was like more than $7,000. So
yeah, so that was about a 2% loss there as well. So I was actually up around, I don't know, maybe $3,000, right? And I had taken that $7,000 loss, right, which roughly was 2% here. So price had initially, I had taken this position up, right? So I caught this little bull move up, and initially price had, let me see if I can find it. Initially, I caught this bull move up, right? And price had closed, right? I was expecting price to come up here, right? And again, it's a combination of greed and, letting my emotions get to me, right? It was a winning day, and I turned it into a losing day. And that's obviously me being as transparent as possible, just so people can understand that trading is something that's not perfect. Trading is something that you're always going to have to work on yourself and always work on your trading psychology, right? So again, it's fairly much the same concept, except, I had the zone drawn out maybe here. I took a position down here, expecting price to come up to here to, again, give me that mark of six figures, right? Because again, I saw the probabilities in my favor. That none of that has changed. The only thing that has changed is the over trading, obviously, right? So this was just a simple case of over trading. Luckily, not over risking. But yeah, I took the position from here and ended up closing out here once price actually started to break under support. Which, as you see,
I can see there the crossing of those moving averages. So why did you didn't take into account this time the moving averages?
Because price is overall in this consolidation range, right? And if we look at the 4-hour time frame, it's still bullish.
Okay. Yep.
Yeah. So in terms of the moving averages, to me, again, they're always just laggy indicators, and we were still trading above the 21 at that point in time. So as long as we maintained above, the trade was still valid for me. And as you can see, it literally just came down, grabbed liquidity, and then went right back up.
Hopefully you had the stop loss, right?
No, yeah, I had the stop loss. I got taken out by my stop loss.
Cool. Okay, Raul, it seems that you know what you are doing. So thank you a lot for this thorough analysis of your trading style. And let's get going. Now I would like to know, what is your biggest inspiration in the trading community, Raul? Do you have somebody or someone or something?
So in terms of like the community and inspiration, obviously there's people that I looked up to that they had the things that I wanted. And, they said they made money day trading and everything. But in terms of inspiration, I don't really look up to anybody. To be honest, I feel like everyone is an individual. And everybody, yeah, you know what I mean? The only person at the end of the day who's going to get me to the levels that I want to be at is myself. So I have to find a way to push myself as best as possible. Now, obviously, there's things that I find online that motivate me to do better, right? But at the end of the day, it comes down to me and the work that I put in.
So when do you see yourself in the 10 years period?
In a 10-year period, definitely I want to have my own fund and manage way more capital than I'm currently managing now.
Cool. And are you going to plan to grow with FTMO more?
Yeah, as of right now, yeah, for sure.
And what would you say to others about FTMO?
I feel like for the one thing that, people don't understand is to make a decent living off of trading, it requires, capital. You're not going to make a full-time income on a $500 account. And FTMO provides that opportunity for you as long as, you could prove to yourself that you've been consistently profitable, on a certain, basis or for a certain period of time. then, FTMO could be a great opportunity for people to come in, trade your guys' capital, keep a percentage of the profit, and at the same time, fund their own personal trading accounts. I feel like the money should always be reinvested, not just blown, and, to fund your own trading account.
Cool. Okay, Raul, I believe that for some traders, it's maybe a lot to digest, but I'm certain that you give us a lot of ideas and hints about trading. So I believe that someone understands your strategy and maybe they can improve their strategy with your inputs. So thank you for your time, Raul. I really appreciate it. And I also hope that you will grow with FTMO again as much as possible. And
for sure.
If you are guys inspired and get some useful hints and ideas from this interview, hit the subscribe button and listen to our other interviews, because our traders are kindly sharing their strategies. So we are really grateful for it. Do you have any last word, Raul?
I mean, at the end of the day, you know what I mean? I was in a position where I knew nothing about trading, to obviously making what I did make in the last few weeks, right? So as cliche as it sounds, if I could do it, then, anybody really can if they have the persistence. Because motivation to me is something that's temporary. Motivation comes and goes, but persistence and dedication could really get you where you want to be in life. So as long as you stay focused, then anybody can really achieve their goals when it comes to trading. And also, thank you for having me on. By the way, I appreciate it.
And that's FTMO.